Hello, and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm speaking with Markus Heitkoetter, CEO of Rockwell Trading Services. Welcome to the podcast, Markus.
Hey, thanks for having me today, Mike.
Glad you could do it. Markus, you've been a trading educator, speaker, and author for many years, but just in case anyone watching isn't familiar with your background, can you talk a little bit about what it is you do and how you got into this business?
How I got into it, super interesting. So originally, I'm from Germany. And you see, I was always fascinated with trading. In fact, I started trading when I was still in high school. This was in 1989. And I really wanted to become a trader. So to open an account, I had to go to a local bank. We didn't have any online brokerages back in 1989, right? So I went to Deutsche Bank and said, hey, I want to become a trader. I want to open an account. And the banker looks at me, high school student, and he said, really? How much money are you trying to put in the account? And I said, all the money that I have, it's 50 Deutschmark. That's kind of like $50. And he said, no, I'm not gonna do this. Anyhow, I insisted until he opened an account with 50 Deutschmark for me. And then he asked me, okay, Markus, now that the account is open, what stock do you want to trade? And I thought, ooh, it's a great question, right? And so I asked him, what stock can I trade for 50 Deutschmark? Great way to select a stock, right? Anyhow, so he said it's a VW, Volkswagen, is trading at 50 Deutschmark. I said, done, let's buy one share. So I was super interesting. Again, back in 1989, the next morning, I wanted to know how my stock is doing. So we didn't have any mobile phones or online phones,
of course not.
Right? So during the first recess break in school, I ran to a payphone, inserted my 20 cents, called the banker and said, how's the stock doing? And he said, well, we're up to 50 Deutschmark and 20 cents. I said, yes, this is working great. So during the second recess break, I called him again and say, how are we doing? And he said, well, we're up to 50 Deutschmark and 40 cents. And I said, yes. So as soon as I got home from school, that we had the rotary phones, right, that take forever to dial, called the banker and asked, where did we close for today? And he said, well, we closed at 50 Deutschmark and 50 cents. And I thought, this is awesome. Trading works like crazy. So same deal the next day and also on the third day. And this is when the banker asked me, Markus, before we continue this, let me ask you, how much money are you trying to make with this stock? I thought about it. Well, I invested 50 Deutschmark. If I can make 10 Deutschmark, that's 20%, right? That's good. So I said, I would like to make 10 Deutschmark. And he said, done. Come to my office. I'll give you the 10 Deutschmark and stop calling me. So this was my first trade back in the days. But I quickly realized that that's not a sustainable trading strategy.
It's funny you mentioned the trading strategies. I know one of your points of emphasis in trading has been things that generate SRC profits, the acronym you have there. Can you talk a little about what that is and how that works?
Yeah, you see, in the beginning of my trading career, I was looking for the 10 baggers, right? Because you see all the ads, how the stock explodes. And back in the days, we looked for the next, IBM. And then we started looking for the next Tesla, the next Amazon, the next NVIDIA right now, right? A stock that starts somewhere at a few dollars and then explodes. And I realized chasing this windfall profits was super difficult. And it was very, very rare. And this is when I realized, okay, I need to change my trading approach. And this is where I coined this term SRC profit. So for me, it's number one, S stands for systematic, meaning that I have a trading plan, a trading system that I can follow so that it is. Number two, the R stands for repeatable, right? Because I want to be able to repeat this. See, everybody can get lucky on a trade. If you trade long enough, you have the lucky trade where you say, oh my gosh, I remember I invested $1,000 and I made $50,000 on this trade. Yeah, but that's not very repeatable. And the C stands for consistent. So for me, it's all about to take profits out of the market repeatedly, preferably every day, right? If not every week. Consistently, but also with a system that I can replicate.
Now, you have some phenomenal information on your YouTube channel, which is Rockwell Trading Services, great for anybody who's watching. And there's some content on there, again, best strike prices to target when selling covered calls, selling options during earnings, and so on, margin calls, hedging against crashes. Why don't we start with the first couple of those? what tips can you offer traders in this market when it comes to smarter options selling?
It's super interesting because in the beginning, I was an options buyer, right? Because this is where you see, oh my gosh, you can make 100% on an option, 200%, 300%. You see all of these ads. And then again, I realized that this is where I was chasing windfall profit. So I decided to take the other side, selling options. And that's something that many people consider really very scary and very dangerous. But honestly, it's something that I learned from Warren Buffett, right? So Warren Buffett, when he wants to buy a stock, he sells put options first, because if the stock dips below the strike price, you're getting a sign. So in a nutshell, you're actually getting paid to buy stocks at a discount. And I thought, that's genius, right? I mean, getting paid to buy stocks at a discount, count me in. I think the key is to find the right stocks.
Got it. Got it. And I know that you wrote a book called The Wheel Options Trading Strategy. And I was wondering, it's an interesting terminology for some people who may not have heard of it. What does that involve?
Yeah, so the wheel strategy is very fascinating because it involves first selling puts against value stocks. And then if the stock, you're collecting premium, right? And then either the stock dips below the strike price or not. If it does not, you just collect the premium. But if it does, you're getting assigned the stock. So you're buying the stock at a discount. And then you follow step number 3, which is selling covered calls against the stock. And you see, many people are familiar with selling covered calls. I'm just going one step sooner, where I say, okay, I want to collect premium before I buy a stock. And the reason why it's called the wheel strategy, because the idea is as stock prices rise, that you get called away. And this way you have a full cycle, selling puts, getting assigned, now owning the stock, selling calls against it, getting called away. And so you start this wheel, round and round it goes. That's why it's called the wheel strategy.
Well, Markus, I know, given what's happened in the last 6, 8, 10 weeks that we've had in the market, some people are probably also curious about some of the other things you've talked about, which is avoiding margin calls and hedging against market downside and even crashes if need be. What are some pointers you'd offer for people on those fronts?
You see, margin is super fascinating because, margin is kind of like the turbo boost for your account, right? So, however, it's a double-edged sword. It can work for you as well as against you. And this is where I always use the example when I taught my kids to drive. I mean, we first did it on the school parking lot. And this is where they were going like 5 miles an hour, and it seemed incredibly fast, right? And you know that now, I mean, we all are used to it. We're going down the highway 60, 70 miles an hour, having a coffee while doing this, right? But in the beginning, this is where, in order to avoid margin calls, the easiest way is don't use margin if you don't know yet what you're doing. And that's something that I learned early in my trading career. I was using margin irresponsibly. It's like giving a Ferrari to somebody who just had a driver's license, right? You just don't do this. So my kids started driving the good old Ford pickup truck, and that was good. So the same here. So how can you avoid margin calls? First of all, don't trade on it. And secondly, then use it responsibly. So it's kind of like maxing out your credit card. Don't do it. Because if you max out your credit card and now you need some money because your car broke down or there's a repair at the house or something like this, now you don't have it. So the same here. Just make sure that your margin utilization or the credit card utilization stays below a certain threshold.
Now, let's shift a little bit and talk about this market climate. I mean, as a technically oriented trader, I guess it's fair to say, I mean, your view may be different from some of the economists that I interview, some of the long-term fundamentalists and so on. I'm curious about what you think about this market with interest rates, though. I mean, what are your indicators saying about this move, which obviously has a lot of people concerned, just the velocity and the magnitude of it?
Well, first of all, as an option seller, what I want to achieve is as much premium as possible. And this is why kind of like that we're finally moving down again, because this means the VIX, the fear index, the volatility index is going up, which allows me to extract more premium from the market. So what is happening here right now? Yes, it seems that right now, as we're recording it, it's the beginning of October, traders are finally realizing the Fed is serious. Powell means what he said, that higher rates are here to stay. And it just catching up with us right now. I mean, we see the 10-year yield making a new high. I mean, I think it's a 15 or 16-year high or something like this, right? I don't think that this is sustainable. Just right now, traders are saying, okay, for how long is the Fed keeping interest rates high? Now, this uncertainty in the market leads to the markets going down and the volatility going up, which I really, really like. And Mike, to be honest, I mean, the first half of the year, the S&P was up, what, 18%? I mean, it was not sustainable. So the dip that we have right now is actually setting us up perfectly for a year-end rally. I mean, earlier this year, we were as high as 4,500 in the S&P. I believe that we will probably end up somewhere around 4,400, 4,500. So not the highs that we made earlier, but this would be a nice, healthy 15 to 17% gain for the S&P, which is a more sustainable move.
I'm glad you brought that up because, again, if I go to some of the fundamental type analysts I've spoken to, some of the seasonality followers that I track, I mean, they're saying somewhat of the same thing. They think Q4 earnings are going to be better than Q3 and Q2, plus we'll head into a favorable seasonality. Is there anything else that you think can drive that, and or is there anything that would change your optimism about, you know, a year-end rally at this point?
I think as traders, we're always optimistic, right? I mean, this is what we see in the markets. If you think about it, I mean, the Fed raised the interest rates like crazy and the markets were going up, right? I mean, they should go down. Right now, if you see it in the markets, it's so weird. Gold just went from $2,000 to $1,800. So much for flying to safety. And on the other hand, we have the Magnificent Seven like Nvidia, Meta, Tesla. All of these are up while interest rates are thriving. So we have a very weird market dynamic here. And I mean, I will remain an optimist in the markets because if I were a pessimist and think that the markets are crashing, I would not commit any money to the markets, right? So this is where I think as soon as you are an investor or trader in the markets, that you naturally have more of an optimism.
In the time that we have left, any particular options or stock plays that look particularly attractive to you here, or anything that you think is probably better leaving out of your account at this point?
Well, so first of all, I don't like to trade Chinese stocks at all. I mean, we see it with Baba, for example. Suddenly Jack Ma disappears, or I mean, other things that are going on in China. I don't like this. I also don't like to trade with leveraged ETFs. They're kind of crazy. Also, biotech, especially Moderna, the kind of one-trick ponies. I stay away from these. I like to trade value stocks, and here's how I personally define value stocks. I mean, first of all, they need to pay a dividend. When they're paying a dividend, they're usually a more solid company and no longer in growth mode. Number two, the PE ratio. I would like to see it below 50, right? In the S&P 500 right now, it's somewhere around 22 to 26. I mean, it changes on a daily basis. So I don't like to go crazy there. And I want to see that a company is profitable. And this is where it's very easy these days, whether you're using TradingView or Thinkorswim or any charting software or even Google Finance to find out whether a company is profitable or not. And that's what I'm actually looking for when I'm investing. So kind of following Warren Buffett's value investing approach. So I'm not trading any crazy stocks, not a biggest fan of stocks like AMC or GameStop or something like this. I'll leave this to others. So for me, it's more the boring stocks like energy stocks, the good old staples, right? Consumer stocks. So I like those.
Got it. One last question, Markus. We're less than a month really away from the MoneyShow Traders Expo in Orlando. I'm very glad you're going to be there and have the chance to speak to people that are in attendance. Can you give a sneak peek without giving away the store of what you think you're going to be talking about?
Oh, absolutely. I'm so excited about this. I mean, I can't wait. So what I'll be talking about is my exact trading plan that I show you exactly how I pick the stocks. I'll give you examples from trades that are currently in, trades that I recently took. I'll show you how I select the right strike price. I'll show you what exactly I do when I get assigned. So I'm basically giving you my whole trading plan step by step so that if this is something that interests you, that you can take it and apply in your trading right away.
Perfect. Markus, thank you so much for your insights, and thank you everyone who's watching. If you'd like to hear more from Markus and really dozens of other trading, investing, and economic experts, I do encourage you to check out the MoneyShow Traders Expo Orlando. We're going to be kicking off the 29th of October, running through the 31st at the Omni Orlando Resort at Champions Gate. There's more information in the link below. And one last thing, if you like this video and learned something from it, be sure to hit the like button and also subscribe to more updates. Markus, thanks so much for your time.
Thanks so much for having me here today, Mike.